Hey guys, welcome back to another video, and today I'm here to talk about one stock that I think everyone needs to have in the portfolio. This is a very easy stock to buy. It pretty much always goes up, and there's no reason that you shouldn't have at least a little bit of this stock. So without further ado, if you guys do enjoy this video, be sure to smash that like button. Also subscribe to the channel. I'd really appreciate it, and let's get right into it. So the stock that we're here to talk about today is ticker symbol O, Realty Income. This stock is not changing the world. Okay, I mean, just to be quite frank with you, you're not going to invest in this stock and really, make an insane amount of money in a day or two. I mean, this is a stock that you're going to buy and hold for a really long time. Basically, what this company does is they're a real estate company. They buy a lot of real estate and then they lease out that real estate to bigger brands and then they make money eventually. But what O does is they take out debt to get this, over $1 billion real estate portfolio. And since they have that, they're able to lease it out to a lot of people. That's pretty much what happens. So we see Morningstar gives it a 5-star rating. Fair value is $75. This company is $56. The main thing about this company, I'm going to look at the screen for a second. Let me know if you guys notice anything. There's a big glaring thing that everyone can see here. It's the dividend yield is 5.63%. So if you guys like dividend stocks, this is the one for you. I mean, this company always has a very good dividend yield. They're always increasing. So ever increasing dividend of one that high is very great to see. You're always going to be making a little bit of money, and then you also get to have some exposure to the real estate market. Maybe you don't own a home, but you still want to be in the real estate market and feel those upswings. Then you're going to be able to get into O stocks. So this is Market Dash right here. I have a free trial link down below if you guys do enjoy what you're seeing on here. It gives a lot of great information you can't find anywhere else. So I really would suggest to try out that free trial, see if you like it. This year to date, it's up almost 7%, so that's great, and they're still paying that big dividend. Revenues of almost $6 billion. I mean, O is a pretty good stock. Just to say the least. They're not, changing the game or anything, but they are looking like they're pretty fairly priced right now, pretty below fair price, actually. So the revenue is just, ever increasing every single year. Not really a lot to look at on their financials just because they do pretty well. Their margins aren't the highest, with the gross margin being a 92, that's pretty good, but then their net margin is a 17. So, that's how it is in real estate. You guys know if you own a rental property, it's probably, not the highest margin, but it is a great, space to be in, a lot of money to be made. So O is actually very cheap right now. We see it actually did hit $75 in the past 5 years. So it is, relatively cheap right now. It's $56. That's why now is a great time to put it in your Roth IRA. Get like 10% of Realty Income in there. So are we in a rate cutting cycle is what I looked up on Google. Yes, the United States is currently in a rate cutting cycle. So when the rates are cut, O takes out a lot more money. Realty Income takes out a lot more money, they borrow a lot more money, and they go on a spree of buying new real estate because the rates are so low. And they've been so high for so long that they've been stacking up cash that now they're going to be able to go out there and buy a lot of real estate. So that's great to see. So they have an $85 billion enterprise value. That's great to see. Annualized base rent. So, if this company does nothing else, they're making over $5 billion a year, pretty guaranteed with how long these leases are. Proven track record of return. So this is the most important part of O. If you guys aren't paying attention to any part of the video, this is the one thing you want to, figure out, or this is the one thing you want to take away, is that 13.7% is their compounding annual total return since 1994. This is beating the S&P 500. They're outperforming the S&P 500. Not many stocks can say that. There's only there's less than 5 stocks that have beaten the S&P 500 year over year every single year. And one of them is American Express. So that's pretty impressive to be up there with them. Stability and growth of earnings. So 29 out of 29 years of positive total operational return. This is going to continue. Position for continued growth. So that's also great to see. And then consistently increasing dividends. This is an S&P 500 dividend aristocrat. That's how you know that they're pretty reliable. They're going to get you that dividend, and it is going to be increasing. So this is a 4.2% compounding annual dividend growth rate, and this is since 1994. Third quarter results in 2025 outlook. So the third quarter results showcase Realty Income's distinctive platform. I'm not going to read all of this, but there's a lot of stuff in here that really, isn't that important. Realty Income is a pretty, predictable company. You see a historical average total operational return is around 11%. That's great to see. Track record of outperformance during market volatility. It's done very well, even when the market is down. Realty Income seems to, go up or not go down as much because it's a little less volatile than the market because we know what they're going to do. So this is who, leases buildings from Realty Income. And the main thing about this is these are places that aren't going away. I mean, 7-Eleven is not going anywhere. Dollar General, Walgreens, Family Dollar, Lifetime. I could read every single one. All of them are not going anywhere. I mean, these are future-proof businesses that people need no matter what. We're talking about shipping. We're talking about cheap stores. We're talking about gyms, restaurants, things of that nature. People are going to need those no matter what AI does. So we see industry diversification. This is also another great thing, is that it's mostly grocery, convenience, and home improvement stores. All three, or their top three, are all things that everyone needs no matter what. So that's also why I like this company. Is very future proof, and they're very predictable. You know what they're going to do. You know they're going to make money next year. So that's why, I mean, the stock price is kind of just based around the rates. So that's why the stock price is down right now, because the rates are down, or the rates are up. The rates are up, so the stock price is down, and then once the rates begin to aggressively cut, the stock price is going to aggressively feel the benefits from that. So a lot of stats here as well. We see that they can pretty accurately predict into the future how they're going to do. Proven track record of value add, asset, and portfolio management. So they already know that they think that they can predict all the way out to 2143. That sounds pretty insane to say. I mean, that doesn't even sound real, but 2143, they think they can predict how their company is going to do all the way out until then. So that's very great to see. I really like to see that this company has that level of confidence and that level of prediction. Another great thing is that they're expanding very well. So we see the United Kingdom, they actually have more than the US vertically, if they're measuring their power of net lease. So they actually have more, and they're actually expanding into data centers, if you will. That is what I love to see. That's the future. Data centers are, where a lot of the real estate is going to be in the future, I think. These are literally just huge warehouses with a bunch of shelves. Big companies like Apple and Google and Meta and Microsoft are all going to be renting data centers. They're going to be paying a lot of money for this. And their, data centers are very minimal upkeep with just a lot of space. So the fact that they're, making that a part of their portfolio, I really love to see. I hope we see that be a bigger part of their portfolio, because I think that's going to be a very high return for whoever does kind of capitalize on that data center space. So a lot of volume for them. I mean, Europe remains a compelling growth market for Realty Income. I love to see that. These companies that are expanding internationally, that's better than, I think, expanding in the U.S. I think international is the future. There are other countries that are growing much faster than the U.S., as of right now even. So it's pretty crazy that a lot of these companies, aren't really even expanding, which I don't really get. Favorable credit ratings, long-term unsecured debt ratings, so they're very stable. This is the one thing about this company is, yes, they have a lot of debt, but it makes sense. If this company didn't have so much debt, they would not be making so much money, so it really is, a spend money to make money kind of situation. But at the end of the day, I mean, is this company, they have these leases that are going out for like 30 years plus, so this debt is pretty much paid for already. They're just waiting for the lease to pay them back. I mean, it's really not that, scary of a risk that you're taking to invest in this company, especially if you're not investing because they're in so much debt. I would say that's not a reason not to invest. I think that is something to take into consideration. I mean, debt is a real thing, but at the same time, I'm not worried about it. And then, I mean, just another thing is like, why would you buy this and not buy, another real estate company? Is because is very set up. It's very well known in the real estate business. It's very, it is the one. I mean, they have 7-Eleven, they have all of these huge names that are under they're these huge names that aren't going to go anywhere. 7-Eleven is not going to go out of business tomorrow. They're probably not going to go out of business ever, and that's what I would love to see. I mean, I want to see companies that are continuing to pay these leases, like 7-Eleven and Dollar General. People always need cheap food, cheap clothes, cheap everything. Dollar General's here to stay. Walgreens, same thing. It's a pharmacy. I mean, Lifetime Fitness, gyms, they're not going anywhere. If anything, they're getting bigger. So the fact that, Realty Income is able to benefit on this, and they don't have to actually like do anything. They don't need to make a new product, or they don't need to, find the next big thing, or, figure out how to keep getting customers in the door. All they have to do is just provide the building, and that's what they do with taking out debt and then providing that to the customer, and then providing them a space where they lease the space, and so on and so forth. And these are very long leases. Like I said, they're over 30 years, a lot of them 20 to 30 years. So these companies are renewing every single year, no matter what. Love to see that, and I think that it's a very good company to get into, because there is the S&P 500, but it's always good to diversify your portfolio. Great to get some, shares of the S&P 500. I think you should get more shares of the S&P 500 than this, But at the end of the day, I think Realty Income is right there where you should have it in your portfolio. You shouldn't forget about it. And that dividend, even if Realty Income is struggling, they're still going to have that dividend of almost 6%, which seems to go up every single quarter. So I really like this stock right here. I think it's a no-brainer buy. There's no reason that you shouldn't buy Realty Income. It looks very attractive right now, especially because it's so cheap relative to where it is historically. I mean, we see that it's peaked all the way, it was at 75, but it's been at $80 before. So the fact that it's been that expensive and they still had that high dividend, I think it's probably going to go back up there. Like a lot of times what I like to do with these stocks is look at the stock price all the time and be like, do I think Realty Income was at the highest point it's ever going to be at right then? No, I don't think so. I don't think Realty Income reached the highest their company's ever going to be valued in 2019. That would be crazy. They've done a lot bigger things since then, and they've made a lot more money. So the fact that they were so expensive right there was probably just because of the rate cut cycle. And now there's a rate. I mean, this is probably when rates hiked right here. It went from $76 instantly to below 50. So it was an insane drop for them. But now they're back on the right track. Rates are going to begin cutting. We're in rate cut cycle, so that's going to be very good for this company. And yeah, that's all I have for today's video, guys. If you did enjoy, be sure to smash that like button. Also, subscribe to the channel. We're nearing 1,500 subscribers. I really appreciate your guys' support. Also, remember, click on that link down below. Check out Market Dash. Let me know if you guys like it. Comment down below what kind of videos you guys want to see next. I really appreciate all your guys' support in the comment section, liking the video, subscribing to the channel. It means the world to me. Catch you in the next video tomorrow. Peace.